If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself. Welcome to the Bitcoin Basics podcast with your hosts, Faris and Gordon from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our disclaimer. Visit BitcoinBasicsPodcast.com to subscribe and discover other free content.
Hello and welcome to the second episode in our Bitcoin Basics series called Bitcoin Begins. And today we'll be looking at a brief history of money, so everything up until Bitcoin. I'm Gordon, your host, and I'm with Faris. Faris, how about we get straight into it and let's have a look at perhaps before sort of money, we had this barter system. Do you want to tell us about that?
Yeah, so before we had money, essentially people would just trade one item directly for another. And anyone who's done basic economics will be familiar with this. If we both lived on an island, I was a fisherman, and you collected coconuts, we would just trade coconuts for fish. And then what would happen is eventually someone else would introduce livestock, and other commodities would be introduced, and it didn't come so useful then trading directly with one another. So that's why we introduced a form of money or a means of exchange. So I would give you seashells, for example. They were used as money at one point. I'd give you 3 seashells for your coconuts, and then you would use 2 seashells to buy grains off of someone else. And so that's why we introduced money, because it just became easier as a means of exchange than basically trading directly a good or service.
And why was that? Why couldn't you just trade grain for sheep or 2 items directly?
No, you could. So you could still trade directly, but what happened is as populations grew and as more products and services were offered, if all you could trade was fish, and I had enough fish, I didn't want anything else, but you needed my coconuts, then there's no trade there. I go, I don't need what you're offering, Gordon, but you need what I have, so I'm just not going to give it to you. And that wouldn't benefit you. But if you could give me money, then I could go ahead and use that money for something else.
Okay, so that makes sense. And also, if you are trading something like meat or fish, there's also a shelf life of that of a couple of days too. So I wouldn't want to keep fish's money for more than a couple of days. So many inefficiencies in the barter systems, as I think we know. So then I say civilization, invented money, and that there are different forms of money, but perhaps we'll just have a look at a couple of them. And one was commodity money. Do you want to tell us about commodity money and how that works?
Yeah, so essentially when we talk about money, we're really talking about money 100 years ago and before that, long before that. So people may have heard of the gold standard. Now I'm jumping ahead here now, but it used to be we traded gold coins. And this was the days of the Roman empires. You would see people with these denarii coins. And that's what we traded. Now it's said that had an intrinsic value. So let's say the beauty about gold, very easy to test. It stands the test of time. There's a lot of really good attributes about gold, and we've covered this a lot in some of our other podcasts. But say, if something happens, I travel and I want to take my gold with me, but I can't use that gold somewhere else. Well, I can melt it down. I can then use it as something else that has an intrinsic value. We also used to use spice and silks as a means of exchange, as a currency. Same thing. If you don't want to trade it, you can use it to cook. You can use silk to create armor, to create a fancy dress, all this kind of stuff. So the gold standard basically was, we used gold or something else, a commodity that you could touch, feel, but also had another purpose beyond a means of exchange. This all changed in the 1970s. When we went off the gold standard. And this was led by America, where we went into a system where we printed as much money as we wanted to. And it went into what we call a fiat system. Fiat basically just means faith and credit in a government. So if you look at money today, it's the governments that print it, and it's not backed by anything. If you can't really use that paper or coin for anything else. If you're to melt down a coin, or if you're to write on a note or on a piece of paper, well, that's pretty useless, because if you're to write on a $10 bill, you could have gone and bought a few books with that. So it doesn't serve any purpose beyond the means of exchange. So that's where currency is today. And that's why we call it currency, because it actually only serves one purpose, a purpose of a currency. It serves no other purpose.
Okay, you jumped ahead a little bit there and covered 6,000 years of monetary history in a couple of sentences, which is quite impressive. But just to break things down, so we've got commodity monies. So the value is in the item itself, the gold, the silver, or whatnot. And you've got currencies, not money, but currency is a piece of paper. So there's no value in a piece of paper, but there is value if you can exchange it to something like you suggest an IOU or something like that. Would that be the main difference between the two?
So there is value in money because it can be traded for goods or services, but that's all it can be used. So gold, for example, is a store of value. And there's a saying that an ounce of gold will always be enough to buy a man's good suit. And you look at the price today, it's just under $2,000 per troy ounce. You can get a really good suit for $2,000. In the 1980s, it was $800 an ounce. Get a really good suit at $800 back then. So basically, gold serves a purpose in that it is a currency that is a store of value as well. The problem with currencies by governments is that they're deflationary. Basically meaning if you take $10,000 today and you put it in a mattress, it's not gathering interest. Well, 5, 10 years from now, 20 years from now, you'd be able to buy less than you could today. So it's actually lost value. And that's called purchasing power. The purchasing power today for currency is, in essence, they want you to spend that money very quickly. And because they print more of it, supply and demand, the more you have of something, the less value it is. So this is why gold and Bitcoin are very good stores of value, because they're limited in supply. And that's not the case for currencies printed by governments.
So is that the main difference between a currency and money? A currency, you put a $100 bill under your mattress and in 10 years' time, it's lost a lot of its value. Is that the main difference, or are there other differences? So
there's another really important one, is who's printing the money? And with that, like the United States government is printing the money. Greece has their own money. We've got, or part of the euro. So we've got all these different currencies around the world. And, we're seeing at the moment issues around the world that are stemming from inflation. So a lot of countries today, you go out in the morning to buy, your liter of milk. Now, by the time you get home that afternoon, in some countries, that's gone up 50% in value. So countries like Venezuela today, people are heavily investing into Bitcoin because they just know that they're not going to lose the value in Bitcoin that they are in their national currency, which is crazy when you think about the volatility in Bitcoin at times. So a currency that's printed by a government is only as good as the credibility of the government itself.
And ironically, in Venezuela, are actually going back to the barter system. So neighbors are actually swapping items directly for each other. So they're swapping sugar and salt and food items and whatnot, which is kind of ironic that they're going back to that.
If your Bitcoins are on an exchange or mobile wallet, you could lose them in this bull run. CoinCompass.com is running a free 1-hour webinar where you can learn about cold storage, multi-sig, and best practices for securing your Bitcoin. Become a self-sovereign custodian of your investment by owning, not renting, your Bitcoins. To register and for more details, visit coincompass.com/webinar.
You've mentioned a few words here like store of value, and I think we're trying to stay away from some definitions and give some practical examples. But you've mentioned a store of value. If you read any other textbook or YouTube video, you'll actually mention these 3 words, and these 3 terms or concepts come up time and time again. So perhaps you could give an example of these 3 terms of money. Store of value, unit of account, and medium of exchange.
Okay, so store of value is basically something where it will retain its value. And anyone who's invested in real estate, they say the three magic words are location, location, location. That's not true, simply because to me, it is supply and demand. And I lived in Melbourne for a while, and they started to basically build apartments in downtown Melbourne. Now, Melbourne was not like New York City or London or Singapore or Hong Kong, where people lived in the CBD. You went into the CBD to work, and then you left to go home. And they started saying, well, hang on, why don't we just build apartments in the CBD? But they built so many, and they lost value as soon as they went up. Why? Because supply and demand. They built more than the market needed. So with real estate, the key term is with land, they're not making any more of it. You hear that. That is more apt than location, location, location. Gold and Bitcoin, they're not making any more of it. With Bitcoin, we know exactly how much we're going to create. With gold, we actually don't really know how much is left in the planet. Government currencies are not a store of value because they just keep making more. And like the real estate analogy, the more you create, the less value the existing supply has.
Yeah, so you've mentioned several times the supply or limited or fixed supply of something, but gold doesn't have a fixed supply.
No, but we don't know how much there is. So I know someone posted somewhere there's a comet traveling around our solar system that has so many tons of gold, platinum, uranium on it. They're saying if we could somehow harness that planet, then the cost of gold here and all those precious metals would just drop. But that's a pretty far-fetched notion. I mean, maybe a Hollywood movie, but not something I see happening anytime soon. So yeah, we simply don't know how much gold there is in the system. And I think this is something that, I had a conversation with someone, this was a kid at school, and he finally understood that if he discovered a ship of gold with $1 million on it, and if he tried to sell it all at once, that would, the price of gold would drop, or 1 million tons, or whatever. And so simply supply and demand. The more supply is introduced to the market, and if demand does not come up, then the prices come down. So the thing with gold, we just don't know how much of it is still out there. If we discovered all these new mines, or a huge mother lode is discovered in all these places, the price will come down.
Hey, next year, Elon Musk is going to send up a couple of rockets and start to bring one of these asteroids coming closer to Earth and catch them in nets. And apparently there's billions of tons of gold in there. So we've looked at store of value, and that's a word you'll hear quite often. So money, good money, or what we call hard money or sound money, is a good store of value. The paper currency that you've got in your wallet, whether it's US dollar, British pounds, Australian dollar, whatever, is not a good store of value. There's two more concepts that people continually talk about money, especially economists, and that is medium of exchange. What's a medium of exchange, and could you give us an example?
So medium of exchange is basically like, so let's say you are in Southeast Asia and I am in Australia. And as an example.
Keep going, yeah.
All right, okay, let me start over. All right, so let's say, for example, Gordon, you are in the United States and I am in France. Now, the medium of exchange in the United States is the US dollar. I'm not using US dollars, I'm using the euro. So if I wanted to purchase something from you directly, I can't use my currency and we can't use yours because I don't have an American bank account. I've got a euro one, you've got an American bank account. So medium of exchange is basically something that we can exchange. This day and age, there is no currency that is a global medium of exchange. So there's no government currency that's a global medium of exchange. Every country's got their own. In the euro, you've got the regional one. So we have national mediums of exchange where basically you exchange money, currency, for a good and a service. So in US, you have the US dollar. France, you've got the euro. So what is it that you are using to exchange for a good or service? So that's just a currency. Bitcoin was designed to be a peer-to-peer, Bitcoin was designed to be a peer-to-peer unit of exchange where under the scenario, if I wanted to buy something from you, I could send Bitcoins to you. So we're bypassing the limited abilities of national currencies, and we're using Bitcoin. And you can do the same thing with gold as well.
Yeah, we'll get to that in a moment. I guess the question that a lot of people ask is, well, if the US dollar and the pound and Japanese yen are such bad stores of value, why are we using them? Is it purely because the government says that IOU is going to be recognized as legal tender anywhere and it's the most convenient medium of exchange?
So with the stuff we described before, one thing we didn't describe, why did we get into currencies? Another reason we started seeing government currencies is taxes. So taxes is essentially started to raise money for wars. And that's why we started taxes. We're just raising money to fight wars. And how do you raise taxes? You're not going to go around and collect someone's sheep and all this kind of stuff. So it just became easier to basically collect taxes. So governments will discourage you from investing in something that cannot be taxed. So in the forget which year it was exactly, but after 1929 stock market crash, it became illegal for an American to hold gold. They had to turn all the gold in. And this is what we are seeing today, is why people are moving to Bitcoin and gold is simply because governments are in the same predicament they were back then, where their currencies are depreciating quite rapidly against each other. So the reason we own these currencies is essentially we don't have a choice. We're citizens, we have to pay taxes, we get paid in this currency. You do have a choice, there's ways around them, but at the end of the day, you have to pay your taxes. And you're going to do so in your national nominal currency.
Yeah, three things are certain in life: birth, death, and taxes. So that's the reality that we live in. You got to pay that paper money that's in your wallet to the government. Okay. So I guess the question to summarize, and we've been looking at money and we've touched on Bitcoin, but we'll get into that in the next episode. To summarize or to sum up, Faris, what would you say is sort of the inherent problem with what we've got, the current sort of monetary system, and especially fiat currency?
Yeah, so the main problem that we have at the moment is just too much debt. And so if me and you go into debt, it's very simple. We basically, to avoid bankruptcy, you pay off your loans. We can't just go ahead and print more money. We've got to somehow come up with means of making that money. We sell assets. So what happens if your assets are greater than your liabilities? Sorry, if your liabilities are greater than your assets? Well, you get sued. In a lot of countries, there's non-recourse lending, which basically means if I owe the bank $100,000, they're going to get that money. They're going to sue me until I somehow get that money, and I've got to pay it back somehow. The problem we have now is governments there's no greater authority than a sovereign nation. So they're printing $1 trillion a month at the moment, at least, just as one was a response to a financial crisis. And then that just ramped up with COVID in 2019 and 2020. So much money is being printed. And the problem with that is that people don't understand when a government prints money, who has to pay that back? The taxpayer's future generations. And there is no exit strategy. They actually don't know how we're going to get out of this situation where we are creating more money. And it really is, if you have a $2,000 credit card, you max that out, you apply for a $4,000 credit card and you pay off the first one. And then you max out the $4,000 credit card and then you apply for an $8,000 and you keep doing that. This is essentially what governments have done, just one credit card after another with a higher limit. That is still debt. So what are they going to do? How are they going to pay off that debt? And there are economists right now, very smart people, having this conversation, and they're actually saying, we don't know.
Yeah, it's interesting to mention that, because I talk to a lot of people and they think that, when they apply for a loan or they get credit from a bank, so for example, if I get a new credit card with a maximum limit of $5,000, that $5,000 is sitting somewhere in the bank's vault, and then if I get a home loan for $500,000, that $500,000 is sitting sort of in the bank's vault somewhere. But it's not. That we're based on this debt-based monetary system, and literally money is being printed out of thin air. Some bank teller at their terminal is typing a few extra zeros onto your account, and it's like, where did that money come from? Hang on, you can print money, but I can't print money. That's kind of unfair.
It's actually a lot worse than we think. So one thing that, so this is 2020, we're recording this, and something that will come out eventually is what we call stock buybacks. So at the moment, and this is a maddening thing, is when COVID happened, and if you just want to look at the S&P 500 stock market, it crashed a good 20% when January of 2020, and then it went back even higher, towards the end of the year. Now, one of the big things that happen is stock buybacks, where company executives and CEOs are borrowing money from the government. So the government's creating all this money, sending it to private banks. These companies are borrowing this money at very low interest, and then buying shares in their own company back. Now, when they're buying that, it's making the stock price go up. So people like me and you, if we wanted to buy shares in Apple, well, we've got to get a job, we've got to pay our taxes, pay our bills, then what's left over, we can invest in Apple. Governments are actually literally, and the Swiss National Bank is doing this, printing money, buying shares in Apple. That makes the price go up, and it makes it harder for the average investor to buy into it, because them buying it makes the price go up. And this is one of the reasons we've seen inequality really ramp up, because this printing money only benefits the top 1% of the world.
Yeah, or even less than the top 1%. So I think we all understand, well, perhaps not the intricacies, but we sort of understand the problem that we're facing at the moment. Governments are out of control printing money, and perhaps we should stop saying money. We should start saying currency. So hopefully by
You're
now,
right. Yeah.
You've got an idea that money is not the same as currency. So when we think of money, and how about we wrap up on this point, Faris? So I'll ask you one last question. When we think of money, we think of terms like store of value. You've got gold, and 10 years later, your gold, your 1 bar of gold coin or whatever under the mattress is more valuable, whereas your $100 bill under your mattress is not as valuable in another 10 years. So we talk about store of value. Currencies simply don't have that. And the other point you mentioned is that currencies seem to have an unlimited supply. Central banks seem to be printing money left over billions of dollars, maybe even trillions of dollars. Whereas with money, and especially a sound money or hard money like gold or Bitcoin, there is that limited supply. And Bitcoin actually has a fixed supply, which we'll get into the next episode. Yep. So to sum up, Faris, money versus currency, why do we need Bitcoin? Why do we need this new form of money, especially when we've already got gold, which seems to have all the good properties of what makes a good money?
Yeah, so why do we need Bitcoin? Bitcoin is an insurance policy, essentially because there is no exit strategy for the amount of debt that governments are getting themselves into. And it is deflationary, basically meaning if you hold on to that money, it's worth less in the future. So Bitcoin is an alternative to the fiat system we described, which is just based on, hopefully these guys in governments know what they're doing. So Bitcoin is a sound alternative to the financial system that honestly has a lot of cracks in it, and that really needs to be completely revamped. So that's where Bitcoin and gold are exit strategies to that. It's a wealth preservation, essentially. That's what they are. They're means of wealth preservation. What's the difference between gold and Bitcoin? Bitcoin is a lot faster. So it's a lot faster for me to transfer my Bitcoins to someone else in the world, and it's a lot more secure. One of the chapters we'll look at is the Bitcoin blockchain, and understanding that will really help you understand why Bitcoin is the safest and most secure store of value man's ever created.
I would agree with that. I think Bitcoin is better than gold in every single characteristic, perhaps except for one, and the fact that Bitcoin has only been around for 13 years, and gold's been around for, 6,000, 8,000 years. Okay, we could go on and on and on about this, but we are going to conclude our second episode. And in our next episode, episode 3, we're going to get into what is Bitcoin. And hopefully by now you've understood the need for Bitcoin, the need for hard, sound money. And all resources, including how to subscribe to our podcast, YouTube channel, or even if you wanted to ask us a question, if we didn't explain something properly, you can find it at bitcoinbasicspodcast.com. And feel free to subscribe to all our channels there, Faris. Anything else?
No, hopefully we didn't go into the weeds too much. It's hard not to.
No, you did a good job. I know you were itching to go into the gold standard and why we needed that, but perhaps for another day or another episode.
Yeah. Well, thank you, Gordon. Thank you for listening, everyone.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.